Hi, thanks for tuning in. This is the US Futures weekly chart analysis for the week ending 4th of August 2023. First chart, as usual, is the US dollar index futures. Put some lines in so you can see where we've been. This was the initial breakdown, and it was actually a minor sign of weakness here, that the market wasn't able to tag this line. Here was the lows of the overall range through here. The market respected these lows at this level and punched through them here. Now you can see this week, price moved up and challenged this breakdown line here. And volume was about average, so it was genuine volume. There was no excessive volume in there and it wasn't low. This suggests that supply was drawn out from the left here. And you can see that the market has closed just below this breakdown line. There's sort of relative safety just below that line. The supply is slightly above. It's pushed the market down and the market's closed just below it. Now, in response, you would expect a test for supply early. If supply continues to be drawn out, the market will move lower. And you've got the lows of this range here where there may be support to that level. A break below this low would be a real negative for this market. You'll probably see a breakdown. There's sort of some form of support likely to be found sort of in this level here. The market will use that to its advantage. If there's an attempt to push higher, you would expect there'll be increased volume required to absorb the supply that's being drawn out from the left here. So we really are at an important juncture in here. I expect the market will attempt to find support sort of in this zone here that I've put the circle. And just exactly what happens there will be important. If it breaks through and breaks down, perhaps if it shows that it can't recover, then you've got a clear breakdown in the background. And if it breaks out above, tests, and then moves on, you've got a breakout above. So this is the important level. Watch what happens this week within that level. E-mini S&P, S&P 500 index futures. You can see there was a period of absorption that went on through here. The market popped out the top on this bar into this zone of expected supply coming in from the left. Now, supply has come in this week. You can see the market pushed lower and it's closed back at the highs where the market was absorbing supply in the past. Volume increased to just a fraction above average, so this was also genuine volume. It wasn't excessive and it wasn't low. And prices pulled back at the lows of the old range where supply was expected to be drawn out. So this is a logical level for the market to pull back to. Volume was increased this week. You'd almost certainly see a test for supply early. Price will pull back, at least to some degree, and then it will recover if supply is found to be low. And if it's not, you'll see the market back lower and probably trying to find support adjacent to where it did on these two down bars here. So look for a test for supply in this market early next week and then a response depending on how much supply is drawn out. We've got 10-year note futures. Just quickly put some lines in so you can see where we've been and where we are currently. And you can see this week that the market pulled back, it recovered, and there's an attempt to support the market. This is buying support coming in. Volume increased. It was just a little above average, so this was also quite genuine trading this week. That's important. When you get excessive volume, there can often be something more happening that may appear to the eye. You need to look further into it. When you get low volume, then there's often apathy in the market. There was no intent being shown, and there was no challenge to any levels that the market may have encountered at that time. So when there's volume around about average, then you can generally consider the trading to be genuine trading, is what I call it. Now, there's been an attempt to support the market this week. Buying support has come in. We'll just have to see the response to that next week. Because volume was a little bit high, there may be a test for supply early, and then similar to the other markets, a response depending on how much supply is drawn out. Copper price futures. The copper price futures have a little bit of a complex level being developed through here. This is the overhead resistance. This is the highs of the old range. It corresponds with a level to the left. You can see the market has found support down here more recently. It's just travelling sideways in a range. The market did actually challenge this level this week, and the increased volume shows that increased effort to challenge this breakdown line, but supply was drawn out and prices pulled back in response. You can see that the market is still sitting up fairly high in the range, and no serious damage appears to be done just yet, but there's no doubt the market attempted to challenge this level, and supply was drawn out from the left here, as you would expect, and the market has pulled back into the relative safety just below this breakout line, or the old breakdown line from here. And look for this market to test for supply next week as well, at least early in the week, and then respond depending on how much supply is drawn out. This may be a repeating theme this week. Gold price futures. Gold price futures have the old high of the range coming through here. This formed the older resistance zone to the left. More recently, price pushed through this level and is coming back under a little bit of pressure more recently. You can see that the market gathered up some strength down here, has pushed back up to this level. It's not really issued any serious challenge to it, although volumes were increased on that bar. That's last week, so that was an absorption bar. This bar here is the most important one recently. If price can push above that bar, it'll definitely be a positive for this market. A breakdown below it would be a negative. So let me just clear that for a sec. Here's the important levels. And it's this bar here on this high volume. Just watch what happens to the market when considering that bar. As I said, a break above it would be a positive, a break below it would be a negative. The market has closed back within the middle of this bar this week, so no serious damage done. Volume was very low this week, so there was no obvious challenge to break out, and selling pressure was also fairly weak this week by the looks. The market was moving sideways. In some respects, you might say that's a mini shakeout, but that's probably not exactly what's happened. But it does appear similar to that. I would expect the market to make an attempt to push up to the highs of this range this week, but maybe not challenge it. We'll see. Silver price futures, similar to gold. You've got the highs of the range coming through here. You can see this was the old supply zone. It's been partially weakened when price moved up here. Now, similar to gold, let me just fill in this gap here so you can see more clearly. That's better. Now, this market does have some exaggerated movements. This move below the line and above this line were probably best termed as exaggerated movements, often due to retail involvement. The retailers can sometimes get a little bit carried away and not respect the levels. Similar to gold, prices moved back. This is the important bar, just like gold here, although volume wasn't quite as high in this market, but price has pulled back. It's sitting pretty much within the middle of this bar, similar to gold. Volume was increased this week and about average, so it wasn't low like in the gold market. It probably reflects some selling that's been drawn out in response to the failure to recover back above this level, this breakdown line just here. But price is easily within the range of this important up bar here, and that's the main thing at this point in time. This level here, a break below that would be a serious negative, and a push above this bar's high or this breakdown line would be a positive for the market. Like crude price futures, saw price continue higher this week. Market's looking quite strong. You can see over the last 7 weeks, prices moved higher and is challenging this breakout line. You would expect at some point there'll be a period of consolidation. 7 weeks of up bars in a row is very unusual. So don't be surprised if you get a little down bar in here somewhere, particularly around this breakout line, before there's any attempt to really seriously challenge higher. And if supply is drawn out, you'll see the market move lower in response. But don't be surprised to see a period of consolidation sideways at some point. This market has been very strong. It doesn't mean it has to, but that's what you would expect at some point. You rarely get 7 weeks in a row of up bars. I can see back here in the past, there was a period here where there was a number of up bars in a row, but this is more the exception than the rule. Aussie dollar currency futures, you can see price has been trading in this sideways range for quite a period of time. I said that there'd perhaps be an equal and opposite reaction here, and there was. The market looked like it might push out when there was some weakness in the US dollar here, but when the US dollar recovered that weakness, price pushed back into the middle of the sideways trading range, and now the market has moved all the way down to the lows of the range, and it's just closed back, trying to hold on within this level. Now, you would expect this market to push back to the middle of the trading range again, but if the US dollar continues higher, this market will break down. There's no doubt about it, and you've got a level down here where the market would probably move towards. To some extent, to a large extent, what happens in the US dollar market will reflect strongly in this market. If the US dollar moves higher, this market will move lower because it moves in the inverse. Or if the US dollar moves lower, this market will move back towards the middle of the sideways trading range. So watch both markets pretty carefully. This market has attempted to hold on at the lows of the range this week, and there's some argument that you could put the lows of the range there if you really wanted, and the highs there. So it has held on. It is looking a little vulnerable. Bitcoin futures, I believe, have an accumulation zone in the background. I think the accumulation zone was going to go through here, and this down bar occurred when the FTX brokerage had all the issues. The market took that within its stride and then recommenced the accumulation. Price pushed up to the highs of the range, shook out to some extent here, and then broke out. Price came back, tested the highs of the range through here, and then is attempting to break out again. More recently, price has been consolidating sideways in the top half of this up bar, which is generally quite strong. My question is, 6 weeks of consolidation is getting a little bit longer than you would normally find, and supply continues to be drawn out. If you look at the volumes down here, there's been some increased supply drawn out. The market has done a good job to be still trading right up in the highs of this bar here. So that's a positive for sure. I mentioned last week there is some chance you'll get a shakeout if supply continues to be drawn out. That hasn't happened, at least not yet, but just beware it could happen. It may even happen over a number of days, remembering this is a weekly chart. So you would end up with a bar that looked like this, but during the week, it may actually happen over a number of days. That's not to say that it will, it's just to say that's a possibility, considering you've had 6 weeks of sideways trading within a fairly narrow range and supply continues to be drawn out. Now this week supply did reduce again, so we'll call this an absorption bar this week, and if that does prove that supply is now low, it leaves the door open for an attempt to push higher. A push above these highs would be a definite positive for the market. You may find that it tests and then continues high if that's the case. So just keep your eye on the trading. A break below these lows would suggest you may get a shakeout or a breakdown. You could get a secondary test of the breakout itself at 25,000, and then any break below that would see price trading back adjacent to where the accumulation zone originally formed. Back to the US dollar index, just quickly before we wrap up. Put those lines back in. This is the most important line at the moment, this breakdown line here. This is the old lows of the range here. You can clearly see the market did push up to this level. Supply was drawn out from the left, and the market closed just back below this breakdown line. And what happens next through here is going to be quite important. The lows of this range would signify where a breakdown would occur. If price breaks down below that level, you can almost certainly say the market will go lower. A breakout above this level may see price attempt to move higher. I would expect a test for supply early in the week. Price will move down, and then depending on how much supply is drawn out, it will recover that lost ground or it will continue lower. Okay. Thanks for your time. See you next week. See ya.